I saw this article in the Wall Street Journal this weekend that kind of puzzled me and intrigued me, so I read it. In fact, I read it a couple of times. How a landlord making $75,000 a year could end up in the millionaire's tax bracket. What the article's all about is Joe Biden's proposal to increase the capital gains tax on millionaires from a high of around 23% to somewhere around 43%, and how this gentleman was going to be trapped in it, and that he is built up, he bought an apartment complex several years ago in Versailles, Kentucky, and he has worked on it for years and made some capital improvements, but at the same time, he had a mortgage, so he wrote off the interest on his mortgage, and then he depreciated it over the years. So now that he wants to retire, he wants to sell it, and he was offered $2.3 million on it. And as best I can figure, with the sketchy numbers that they give you, he was going to end up with somewhere between $1.2 and $1.4 million in capital gains off of the property. And that would, in 1 year, make him that he made $1 million in that year. And under Joe's proposal, that would push his total capital gains tax from 23% to the proposed 43%. So he thought, well, he better get it done quick before the end of the year, before it was enacted. And then he learned that there's a good possibility that it could be retroactive to April of 2021. So he's in a bit of a pickle. And the article goes on to say that this is actually a pickle that roughly 25% of the people in any given tax year find themselves in that they are not millionaires. They have not made $1 million a year at any other time in their life, but as a result of selling a business, piece of real estate, anything of this nature, they would be in this position. And as the law is currently written, there is no way for them to avoid this situation, that is to say, the taxpayer. So I got to thinking about that. I had sold a business. I had sold my financial planning business for well over $1 million. And actually, I didn't have much tax exposure at all because I wasn't able to depreciate that, but I had made capital improvements to the business, and so my capital gains wasn't that great. But nonetheless, what I did was I sold it, and I made the payments over 10 years. Now, I trusted the people I had sold it to because I had worked with them in the past, and I could understand how this gentleman with his apartment complex might not be comfortable selling it over a 10-year period. But as I said, best as I can tell, his profit is going to be somewhere between $1.2 million and $1.4 million. Well, what if, and why? What if he sold half of it on December 29th and then sold the other half of it on January the 2nd? So his income, his reported income in either year, if it's 1.4 million, would be 700,000, and thus he wouldn't qualify as having $1 million worth of income in that given year, and thus wouldn't be subject to the increase in capital gains tax. That's how I understand the law. And this whole thing just seemed, because they then went and said that he had actually talked to his tax advisor and got this information, and then they said, the Wall Street Journal said, they had put it in front of their tax advisors and they came to a similar conclusion. Why didn't anybody think of, it's an apartment complex with multiple buildings, 40 units. He makes about $400 or $625 a unit. He's got about $300,000 worth of income coming a year. So he's getting a decent price for it. But why don't they just sell it in two different sales. I see no reason that the buyer would have any objection to that, and that way he could spread his income over 2 years. So I thought, well, you know, maybe, Carrie, you see things different than other people, because I had that experience where I didn't have any adverse effect from selling it over a period of time. So I wanted to share that because maybe you find yourself in this same dilemma that, oh my God, they're going to raise the capital gains tax and I'm going to fall into this one-time millionaire, as that article says. 25% of the people who are declared millionaires are over $1 million incomes a year are one-time. Just spread it, sell part of it on December 28th and the other part on January the 2nd, and you've avoided the problem. And this is kind of indicative of what I have found in my experience as a financial advisor. There are some very simple solutions to complex problems quite often if you'll just think it through. If you'll just give some thought into, okay, what is the problem? What is causing the problem? How can I avoid the problem? And taxes are a problem. But again, and I want to, I even got to thinking of, he could put that into he doesn't have any children. He's not married, so he doesn't have any heirs. He could even put it into a living trust so that this buyer actually agreed. He says right now he's taking a salary of $75,000 a year, and the property's generating $300,000 a year. He could probably put it into a living trust and, in fact, create a cash flow for the rest of his life based upon the profits coming from the complex, and then name the buyer the beneficiary of the trust. Now, it may give the buyer some motives to see to it that he passes away a little early, but there's all kinds of ways there's more than one. What was the saying? There's more than one way to skin a cat. Boy, that's a disgusting thought. But there are. So that's what I want to encourage you as one of the viewers of Best of Us in Retirement, is that if there's an issue, think it through. Talk to better accountants than obviously the Wall Street Journal or this gentleman, Settlers Point, it's called, in Versailles, I think that's how you pronounce it, Kentucky. And he wants to move to Atlanta. I thought that kind of interesting too. He wanted more culture. Look up the article. It was I believe it was Saturday's Wall Street Journal of this week. And see if you don't agree with me. And if I'm overlooking something, put it in the comments. Help me out if I'm overlooking. If this isn't as just cut and dry and simple as I think it is, put a comment in the in the comments and set me straight. And then if there's anything else that you'd be interested in fact, one of you suggested that I create, in Best of Us Investors, I have a portfolio that I share with my viewers on our Discord, and it mimics the trades that I make, and I'm something of an aggressive trader or investor over there, very heavy into biotech. But this individual suggested I do something similar on this channel and build a portfolio around dividends and REITs and more of an income portfolio, and maybe get into some bonds. If that's something you think you'd be interested in, and if you think you'd be interested in participating in a Discord, if you don't know what a Discord is, Google it, and give me some response to that in the comments as well, and we'll see if we can't help more people. I tried to comment on this Wall Street Journal article, but I couldn't see where I could do it, that just sell part of it in 2021 and the other part on January 2nd of 2022, and it's not an issue. All right, that's my take for today. I'll be talking to you again soon.